I am surprised based on the clients we see, activity talking to people, just the lack of lowball offers, as you say, disrespectful offers, Jeff. The point you brought up is just like, I just don't understand. Just throw something out there. Like, I say no one, but like, I feel like almost 0% of people are doing that, especially on some of these multis and some of these single family homes that need some TLC. Throw out the lowball offers. What's up, Colorado? Chris Lopez here, the host of the Denver Real Estate Investing Podcast, bringing you our monthly podcast on our August updates for Colorado. So we're recording this in September, but we're going to talk trends, news articles, and then activity on what we are seeing, plus talk interest rates today. So lots of great stuff to talk about. And I've got 3 of the usual 4 co-hosts here today. Troy Howell with Nova Home Loans.
Hey, Chris.
How's it going, Troy?
Good, thank you, sir. Jeff
Wright, our broker up here in Denver. Good morning, Jeff.
Good morning to you.
And then Jenny Bayless down in Colorado Springs. Good morning, Jenny.
Good morning.
And Brandon with Key Renter, unfortunately could not make it, so we'll have him back next month, though. But as we like to do in this podcast, we like to talk trends, talk about what's going on in the market, and have some lively debate as well. So, Jenny, what is going on down in southern Colorado?
Well, I think the stat that stuck out to me the most this month was that we crested into a 4-month supply of inventory.
Wow.
Yeah, that was kind of surprising that we kind of hit that mark. I know according to Lon's charts and everything, he would define that as a buyer's market at this point. So I thought that was pretty interesting. Sales month over month are down. New listings are down. Total active is even down a little bit. So just kind of a whole lot of stagnation. And then in terms of pricing for single family homes, the median sales price was $480,000, which is down from $497,000 last month. And it's also down year over year from August of last year at $490,000. The average sales price is down slightly from last month, but up slightly from this time last year. So kind of, a whole lot of it just kind of staying put. People seem to be still getting the pricing that they want, but probably not in the speed in which they would hope for it to happen.
And it looks like condos and townhomes are down quite a bit more.
Yeah. And that's kind of the trend that we've been seeing. I know we've kind of talked about it in detail over the last couple of months, just in terms of HOAs really pushing down on price affordability for people just because of, the increased HOA costs, primarily due to increased insurance premiums across the board.
So on that, I was talking with a friend, an investor. He owns, I think they're townhomes, 2 townhomes, and it's like an 8 or 10 unit complex. So it's a relatively small complex in northern Colorado Springs. And their bookkeeper just quit because essentially the HOA is like insolvent. Anyone want to guess how much money they have in their checking account?
Oh my God.
$0.
$22.
Right.
$150.
It's like $3,100.
Okay.
Wow. I win.
So I mean, and they have to replace the sewer line because one of the units in their contract. So it's going to cost a few bucks.
Oh, sure.
And so it just shows like it is. Just goes to show like the pain of HOAs right now. Mm-hmm. Now the HOA fees are like $250, and said they're raising them and doing special assessments, but like, goes to show like the pain down there.
Yeah, that's kind of a common theme with some of these places. With these
So,
HOAs not being properly
in
managed.
an HOA like that, where like does not have proper reserves set aside for maintenance, probably not even like their annual insurance premium when that comes due, right? Can Fannie or Freddie lend on that?
Well, if it's a true townhome, not a condo, then a lot of times we're not pulling up the HOA financials on a townhome. So if it's a condo, then we're looking at that stuff, and that would obviously be very problematic.
So condo would be no.
Condo would be no. Townhome would be actually likely to be lendable still.
Okay, because you don't pull HOA docs on.
Right.
Okay.
Yeah. Just verify the HOA, and they don't really dig into the solvency and the criteria like they do for a condo.
So what's the definition of a townhome versus condo for
that is always interesting, and you never assume one's a condo because it can say condo and it's a townhome, and I've seen townhomes called townhomes, and in the legal description you'll see condo.
It's
So
when you
gotta
own the
look at
land, right? Isn't it?
the ownership. But I've seen properties that I thought for sure were like single family or detached, like side by side units in a little community, and they were all condos.
Wow.
Like where I used to live in Southmore Park, across the street, there was like 8 units, and they were actually a condo complex, but they were single family ranch detached homes, and it was still a condo complex.
Wow.
So never assume is what I say.
Or go to the legal docs to confirm.
Legal description will tell you a lot. If it says condo in legal description, you can pretty much check to the box condo.
So what's the we know the numbers on there, Jenny. What's the feel? What's the sentiment down there?
Stagnation.
Yeah.
From what we've come from.
Yeah, absolutely. I mean, I don't know. I see houses in my neighborhood. I drive by them every day, and they have been on the market for a long time because people are wanting, those prices from a couple years ago. And I guess they have the ability to sit and wait. I think that's kind of been the story for most people, is that they have enough equity. No one, not no one, but a lot of people don't have to sell. So they're going to wait and see if they can, eke out an extra 20, 30, 50K.
But are those houses vacant that you're driving by in your neighborhood?
No, I don't think so. I think people are living there. So I don't know what they're doing. Maybe just, waiting and seeing what happens.
What one house I don't understand on my street, same thing. So they're, they are definitely priced very, very aggressively. Yeah. It's been vacant for like 4 or 5 months now.
Wow.
And I'm like, when does the point? Because I mean, that's what, $3,000 a month, if not more, on the cheapest side for a mortgage and HOA and taxes and PIT. I'm like, how long do you sit before you just spend $40,000 or $50,000? Plus, a house sitting vacant is like
right,
never
when you
good.
could have priced it right in the get go.
Yeah,
right. But that's always the hindsight.
Yeah,
if the listing agent's realistic, the truth is they should not be listing anytime, post July through the end of the year. They should wait till spring.
Oh, I agree.
Yeah, so that's like just bad. The listing agent just saying like, "Oh, sell your house." And then
listing agents will give you overly optimistic sales prices, Jeff?
I don't judge.
No,
I don't judge, because there's no judging here.
So here's the kicker. So like, there's too often a tangent here. Like a block over was this old vacant land that the Douglas County School District had bought to build a school one day. They didn't, and they sold it back to the developer. And so they're building like 40 some new, nice new builds, right? All same single family style, but all just gorgeous, new builds today. The 9-foot ceilings are gorgeous. And they're priced at like 1.2 million, 1.3 million. And then this house, they're pricing at 1.1 million. I'm like, dude, you guys are insane.
Wow.
Like, if I'm going to spend 1.1 million, I'm buying the new build.
Always.
Yeah.
Always. Then I can pick my own colors.
And their concessions are way better too.
Yes.
Yeah, you could probably get the rate down to like $499 with the builders.
Builder bought down rate.
Yeah. What about investor activity down there, Jenny? Any...
Crickets.
Anything? Yeah.
Crickets,
are you seeing,
at least, for me.
Are you seeing any on the the multifamily side, any more motivation or more distressed sellers or deal making happening?
I've come across a few instances where agents told me that, the seller is, slightly motivated. But I mean, yeah, they're just kind of sitting there. Definitely the fourplex population in the MLS is growing by the day. And I'm guessing that they can just let it ride since they're cash flowing it still. So I don't know. It's very interesting. It's just seems like no one's really in not a hurry, but no one's, super interested in purchasing. It seems like at this point. But
I'm surprised in that, Jenny, because investors, when do we ever see buyers markets last 10 years, 15 years? And when do investors really get the best time is when even for a 2 to 4 unit, but single family as well. It's like investors, they thrive when the competition's gone away, right? They love it because then they could get themselves a much better deal than in a hot market when rates are 4 or 5%, 3%. So they should be happy that the rates are still reasonably high and stuff's set in the market. I mean, I'm surprised your investor clients aren't saying, hey, let's just do a 100K lowball offer on this fourplex over here because that's where it works at the high interest rates, just to see what they say, right? And I'm not saying they'll agree to 100K less, but I'm surprised some of your investors aren't coming back to you right now because like buyers markets usually don't last a super long time.
I know. Yeah, there's been a few properties that have popped up that, you know, personally, if I were in the position to buy, I would have hopped on it at this point. But yeah, I don't know. Not sure.
I kind of feel like there's a little window that presents itself where you start seeing these rates coming down like they are now, and it's still a buyer's market, and then you have good opportunity, right, to build a little bit better rate, get a good deal on your transaction. But then when the rest of the people start catching up, it's like these rates are getting better, the buyers start coming out of the woodwork, those deals are going to go away.
And what happens to prices when demand skyrockets?
You're not going to get the concessions and all that.
I mean, I agree.
To some degree.
I am surprised, you know, based on the clients we see, activity, talking to people, just the lack of lowball offers, as you say, disrespectful offers, Jeff. The point you brought up is just like, I just don't understand. Like, people are even just throw something out there. Like, the days of like, hey, go out there and throw 30 offers and maybe it starts 2 or 3 conversations, right? Like, I'm surprised, like, I say no one, but like I feel like almost 0% of people are doing that, especially on some of these multis and some of these single family homes that, you know, need some TLC. Like, throw out the lowball offers. I wonder if it's just everyone's so like still, you know, from the last 10 years, so hyper focused on, hey, you gotta make a very nice reasonable offer within like 3 minutes, you don't get the property. But like, where the lowball offers at? If
you throw 10 lowball offers, I can almost, maybe not 10, maybe let's call it 20. I bet 1 out of 20 would at least counter you or even maybe accept it. That's what's surprising. You're right. Like, I bet 20 offers out there, one of them would probably, there's one motivated seller in that 20 that would probably negotiate with you.
That would be a great like investigative journal thing to do next month, Jeff. Go make 20 offers. Come back next month on podcast, report to us. Maybe we can pull some money together and buy it, right?
What they say, yes, Chris.
Okay, let's decide what kind of property we're going to go for and then go for it.
But I think part of it too, so on there is, you know, I think there's a lot more distress in the commercial stuff. And we've seen this, and I saw an article, I think it was in Forbes or Fortune magazine, just talking about national trends. And they were saying like new builds are selling for less based on like a per square foot basis
I saw that too.
Than resale properties, which I don't know if that's ever happened before. That happened in my real estate career, which is, you know, not super long, but it's not that short either. But like, I think a lot of people too, like new builds are attractive right now. And those builders, man, they are not doing well.
No, they are not happy campers.
Yeah.
Especially the smaller new builders, right? Not the like Lennars the world, but the small
they can
guys.
write it out a bit better. But even like one of my neighbors, they work for one of the big builders, and they've already gone through like 2 rounds of layoff of like 10-50% of their total company headcount.
Yeah, I was kind of hearing that too with ground acquisition and ground development for these builders. Like even your Lennars and stuff is really slow because they can't get their inventory moved.
That might be a study, is disrespectful offers on these new builders and see what they say if you could get the concessions plus the price.
Well, I've had a few friends and clients. It's been about 20%.
Really?
And those have been like more like investor specials where they have their advertised kind of like owner occupant price, I'll say. Yeah. And the investors come in with like, want to buy like 2 or 3 properties. With discounts and concessions, it's been a 20 to 25%.
For a new build.
Yeah, like one right over here by Esther's, it was just over 100K off, which was right around 20-ish%.
Yeah, smart.
So right there in Virginia Village.
Yeah.
So,
yeah.
So again, there's opportunity out there, guys.
Buyer's market.
Make lowball offers or go talk to some builders. All right, so some Denver trends here. So I have it pulled up on the screen here. What's interesting is our active inventory. Is your eyesight going bad, Jeff? Oh, here we go. Jeff had to scoot close to the computer monitor. So we had 13,000 active at end of August, just about 14,000 active at the end of July, and about 10,700 active in August of last year. So we are down about almost negative 7% month over month, so from going from July to August, which the significant thing there is that is a lot steeper than historical. Historical is like a 1% decrease in active listings, and this July, August is 7%. So that's a lot steeper. And it almost seems like maybe inventory is going to start leveling off from where it's building at. So that was one stat that jumped out to me. Now, our prices, a little different story than what Jenny's seeing down there in the Springs. Like I'll just separate detached and attached, since that matters a lot more now, as we've discussed. Like our average for detached is up about 0.3% of the year, so it's flat. Median's about 0.3% down, so we'll call it flat. Month over month, though, average was up 2.5%, and median was flat. But same thing on the condo side here, or the attached side. Again, this is townhomes and condos, so I think we're getting some, can't separate out condos on this data right here. Prices are down a few points year over year.
Yeah.
Any other data that just kind of jumps out to you guys on here?
I just always wish they'd break out the condos from the townhomes.
Yeah.
From my perspective.
Yeah, that'd be nice. Yeah. I mean, the days on
townhomes.
markets, you can see that's like, where's that going, right? For both detached versus attached. Not as high as what Jenny's experienced in Colorado Springs, but definitely trending to more of the buyer's market. I mean, you probably remember, Chris and Troy, when days on market was like 5 or 6.
Oh, yeah.
Yeah, during like the height of COVID.
Crazy town.
And this is more of a balanced market, so that's great news. I mean, look at like attached properties. That's extremely long time. And
I wish, I don't know how to pull this data, but I think it would be like a very interesting like distribution, because houses that are priced right and in desirable locations, I mean, they're still getting multiple offers, and they're in a contract in the same weekend, right? Hey, they list Friday, they're in a contract.
I've witnessed several of those.
Yeah. And so you have properties that are, I mean, they're literally 3, 4, 5 days on market. Then it's the other end where a lot of properties are 90 days in the market. I think there's a lot less in between.
Right. I've always felt there's that initial wave when you first go on the market. If you don't capture something there, then you got to wait for that new buyer to come in.
Yeah.
And then you're playing the waiting game, and you can be that 90 days pretty quick.
Yeah. So, all this being said, there's opportunities out there, as we talked about, like pessimistic news, kind of crappy numbers. I mean, there's good opportunities out there for buyers. Multifamilies, both residential, commercial, new builds. Go out there, make a bunch of lowball offers, and then see what conversations start, right? That'd be action items. So one thing I actually want to bring on here, I forgot to put on the agenda, guys, but I'm gonna call an audible here. I think last week, Jeff and Troy, you attended maybe 2 weeks ago a couple property walks with Pad Split.
Yes.
So Pad Split's new-ish, and they're like a year into Denver and Colorado Springs. So they are, have like a much more turnkey process for essentially room by room rentals. And I think you guys walked 2 or 3 properties of a short-term rental operator transitioning to Pad Split. Right. I wanted to get your take on the numbers, the walkthrough, the discussion, because I unfortunately could not make it.
Yeah.
All right, so Pad Split, we met him at one property, and what's interesting about it is they take this Airbnb or current Airbnb and chop it up. So it's a nice property, nice single family in Arvada, and they're going to chop it up into a 7-bed, 3-bath house. And currently it's a 4-bed, I believe.
What was that? Yeah, it was like a 4-bed with not much going on in the basement.
Yeah, basement was like open, like a game room.
Yeah.
So they're gonna make it a set. They're converting the living room to no living. Imagine Chris and that it's going to be
like limited
tri-level. I guess
right.
I think of like a tri-level house with like the fireplace, secondary living room with the main living room when you walk in, and then they're gonna make those bedrooms. So 0 living room, all bedrooms, and just the only common area is just the kitchen.
Yeah, no family room. They're going to convert the family room into a bedroom as well.
So I guess maybe a little dining room to the side a little bit, but not really. That's it. So it's going to be a 7-bed, 3-bath place, and they're going to get supposedly $264 per week.
So that's $1,000 a month.
Yeah, and they charge 8% for tenant placement. And they have a 6 to 8% vacancy rate.
Yeah, it seemed really pretty low.
And they charge by week.
Stats.
They pay by week, not by month. And then parking over there, I think that's going to be an issue. It was like it's a normal residential home where smaller lot. So I'm kind of curious how they're going to handle all those cars. Or maybe they'll find people that don't have cars. Who knows? But It definitely can't handle 7 vehicles or more. It wasn't a corner lot. It wasn't like a wide lot. The driveway was just
so they'll be parking in front of neighbors.
Yes. And
but there was already a lot kind of going on in the neighborhood. Like the guy across the street had a lot of vehicles.
Yeah, so maybe
around, so.
they'll be okay. But that could be a concern that they didn't really
sure.
go nothing. But $264 per week times 4 times, 8% for their fee, and then another, it's called 8% vacancy rate. That's pretty good, for doing no work. But that's just tenant placement, Chris. You still have to, if you wanted property management, like someone to handle all the calls of like, oh, the sink's leaking. They don't do that unless you pay another, what was it? Another
8%, I thought it
another
was.
8% on top of that.
And they refer that out to someone local.
Yeah, so it's not even necessarily they're a property manager. They're just the tech company. They're just a platform. That's what really they're on. But they are converting all the rooms. So on paper, it sounds pretty good. It's like, okay, $264 per week. If that's accurate, right?
I mean, does that jive with what you see in your rentals, your room by room rentals?
Oh, also the other thing they're doing is furnished, Chris. So all the rooms are furnished. That's the difference. So I don't do furnished bedrooms. I don't want to spend the extra money because to me,
so that's how they were getting the rent premium that you're getting,
right? Because furnished, there's obviously a market for that too, and it makes it easier for move in, move out, right? Because it's just like their personal clothes and stuff like that. But it's a bigger cost up front, right? So you're spending a lot more money. So I'd say that's about right. About what, $1,000? Take out the vacancy rate plus their fee, so you're like net. I guess what's the math there? 264 times 0.84 times 4. Jenny, what is it?
Jeff, I actually have a couple of questions. So the first question I have is, if they rent by the week, is it more of like a kind of like an Airbnb type of setup? Just like, how long are these leases for? Are they month to month? Are they week to week? Like, that's just a unique attribute that
I know.
It is.
That was weird. I think
they rent by the month, but they pay by the week, right? Isn't that what they? Yeah.
That's right.
So it's a month to month lease.
Because they have to stay above the 30-day threshold for the short term reasons.
Yeah,
I think, right?
Did they talk about like how long the leases were, Troy? I think they.
Yeah, we didn't get too much.
We didn't go
into the
that
details,
but.
I know they call they have members. That's the thing. It's
that was what I was going to bring up.
Their unique thing, because I've explored that and done some webinars with them, is they're actually not tenants, they're members. They're pad split members. And I forget there is some
loophole.
There's some
nuance
rules
differences on there.
Yeah.
So Jenny, it was
So do
membership
tenant laws
agreements.
apply still?
That's what they're trying to, because they use membership agreements. They're a member of the house, so maybe, and that's where I'm not a legal scholar here, so I don't know if that.
So
I don't know if that. How
so
that
then
works.
I guess. Yeah. So my other question is, why do you know the owner of this home? Like, I'm just curious why they changed from short term to the pad split model.
I think it's because the Airbnb is too much up and down, right? Seasonality risk. And, with this model, because they're just starting out in Denver and there's nice demand, you don't have that seasonality of like going like this, like, oh, I have to do my Airbnb. Spring, summer's great. Fall, winter sucks. So I have to switch to midterm. And this is a nice house. So this house we saw just one house. It's a very nice house, like quartz countertops, little white cabinets, huge kitchen, like a million cabinets.
That seems way over improved for a room by room.
Well, I'd say it's, but the cabinets having like that many, it's big kitchen. So in a way that was kind of like a nice setup for that many, 7 people, and will they achieve, how long will, the questions we should have asked, which we didn't really have time to get too much into it, was like, how long will it take to fill 7 rooms? What if it takes 3 months?
Well, I'm curious, what's the conversion cost? Because they have to put in some new walls and new doors and other stuff, and then some furnishing. I mean, that's got to be
every bedroom.
I mean, that's got to be $20,000,
probably more.
Yeah,
I'd say 30 to 40.
Okay, so you think it's going to be a $30,000 to $40,000
investment,
especially if you wanted to add rooms to that basement, which we talked about.
You got to add rooms to the basement, egress.
If you want egress down there,
and he still has to furnishing every bedroom. I mean, what's the low end of that? Like $2,000, probably up to $4,000. I mean, I'm just thinking of like cheap furniture.
$2,000,
call it $2,000 to $4,000, somewhere there.
Yeah.
So that's per bedroom. So that's already about close to 14K right there just on furnishing.
Oh, I would love to see the P&L of that.
Yeah, me too. Yeah, and then my thing would be like, let's just say they can achieve that at that vacancy rate, at those 264 per week numbers. I mean, they'll probably get more for the master one, of course, too. Like that was just the shared bathroom one. But it sounds, when you take away the living room, the only thing I didn't like about it was like they're taking away both living rooms.
How do you not like that? You're all about like heads and beds, though.
But the difference is, Chris, I provide a place for people to sit in peace if they want to, but I don't want them to sit there.
That's called outside, Jeff. Sit in the back patio. Put a little
the difference is, Chris, of
for
like now it's just like a boarding house almost, right? It's like there's no common area. It's just literally the kitchen, right? So I mean, I like that, but I also could see people wanting just like a place to sit besides their bedroom, right? So they go to the kitchen.
Oh yeah.
Do they have different weekly room rates if for a 7-bedroom house versus like a 5? Because I feel like
yes, they
7
mentioned
is a lot of people in one home. So
they mentioned that too. Like the ones like there's like a little, what's the right number, right? Is it 7? Is it 10? Like so, some of these get up to like 12. But you could definitely agree. No, I agree with that. Is the lower amount of people, you're not like in this giant roommate situation. So you would probably achieve a higher number than a 7, 8, 10 bedroom place, like a 5 in your example.
So here is like, 30,000, 40,000 conversion furnishing cost. And then that doesn't, I don't see how that does not improve the resale value of the home.
No, actually they talked about that too. So
okay.
You could take these walls down. So you have to pay all that cost to make all these bedrooms, right?
But if you take it down, you have to,
undo it. Yeah, demo and all that, clean it up, patch it up. Stuff. So you have to, because this is not who wants to buy a 7-bed, 3-bath house, right?
With no family room and no
living
family
room. Right. So you'd have to, if you sold it, now you got to demo all those walls, patch everything up, the flooring, all that stuff. So you're right. There's more, when the exit strategy, now you got to plan another probably 10, 15K of demo and all that stuff to make it back to a 5-bedroom, a 4-bedroom house.
So Jenny, would you ever consider doing that with any of your single family homes in the Springs?
No. Even for the price premium, it's just that I'm just hearing a lot of headaches involved. Yeah. So especially I'm not super convinced about the actual management piece of this. It sounds like that's more of an afterthought. And I would want to make sure that the person that is managing, or, the group that's managing a unique type of property like that is really experienced in that, as opposed to just kind of like, it sounds like perhaps farming it out to whomever might take it. So just because that, I think the management piece is, 95% of the success rate in a model like this. That's why like people like Miller are, successful, because he's nailed down the management side of things. So I think, I don't know, I would need more convincing to that end.
Miller, obviously unique person, systems oriented engineer type, right? So he is more an exception to me, because the average person that's not like that is going to have, that's the part, the operations after you, like, anyone could buy a house, make it a 7-bedroom, like a giant house. But how do you deal with 7 leases, 7 people, 7 personalities? How do you handle what happens when you let someone in there that's the wrong fit? How do you handle that? How do you deal with all these strangers living together? Because it isn't that simple. Even people that, like, it looks good. It's one of those ones that, like, buy in Cleveland, Chris. It's like, oh, you buy a $100,000 house, it rents for $1,000, right? So on paper,
looks good,
looks great. Like, oh, I could buy 10 of these, and then this thing will cash flow better than anything in my Denver portfolio.
Yeah,
but when you go to
sleep at night anymore, because you're stressed out.
Exactly. So I look at it, it's a strategy for some, but not for all, and it's a fantastic strategy. I think to get started, it's a good one to experiment with, especially on a single family. But for like long-term viability, I think it's definitely more management intensive. You really have to have good systems, really be almost super, you almost have to have a superpower of being amazing at screening. And that some people just don't have that ability, or they want to take shortcuts like, oh, I put 5 people in this house and they didn't go through all the steps. And it's not a strategy for all. I think it's one that pad splits having trouble. Of course, it makes sense because how do you convince people that are old school, like rent to one tenant in a nice single family house? Oh yeah, we're just gonna chop your house up and rent to 7 people now. So more wear and tear, and that just because on paper it looks like the cash flow is better. You have to do the property management or pay a super premium of what I've seen is 13 to 15% for PM fees for property management.
Yeah, that's what's concerning me is, just I don't know anything other than what you guys are talking about it right now, but there's also a competing interest involved if someone's placing a tenant and then they wipe their hands of it and give it over to someone else to manage. Like the whole point is you want to place someone that will, function well in your property. And if you don't have any like lingering, connection to that, then it's like, yeah, just heads on beds, like you said, and it might be a massive disaster. So I don't know. I'm probably being a little negative about it, but I'm just kind of thinking through.
It's so Miller's taken it to a new level. I mean, his book's great. I read it. He has great systems and processes and how he does things. And people that that's probably the first thing someone should read if they're trying to do the strategy. It's a great place to start. But even with all that, the average person works a W-2 or a job where they're busy, right? They don't have time to go show a place and fill 7 rooms up. That takes some time. Mm-hmm. And it is more management intensive and it's more wear and tear. And that's assuming you bring in the right people. What happens when that wrong person ruins the tenant experience for everybody else? And now you got to deal with that person. And then all the other people want to move out. So now instead of dealing with 1 vacancy, you got 4. Because they all just move out. So that's also something that it's not as easy as sometimes these podcasts make it seem to be. Because on paper, it's like the best deal, right? You buy a single family for $500-600K, make it a 7-bedroom, rent out every room at $800 to $1,000 per room. Oh yeah, it sounds way better than renting to one tenant. But that's also, you have to be an amazing operator to make that work, and it's not for everybody. It's strategy for some,
Yeah,
yes.
but
yes.
yeah, and I mean something like every podcast, right? Every podcast or books makes real estate investing sound great and easy.
Yeah.
So not just pad split, and I think operations, no matter what, matters.
Yeah.
But I think for especially pad split, short-term rentals, operations is so much more important than your traditional long-term rental. So a trend I've noticed is I do a lot of portfolio reviews, analyses with clients, and most are kind of your traditional, single family or single tenant landlords. And it's like, hey, you want cash flow? Do a pad split, right? That's kind of like the pad split room by room. It's like, hey, pad split, they have actually management now. I don't know anyone that I've talked to who has converted to a pad split. They don't want to. They've either just kept it as is or sold the property and moved the equity elsewhere. But I know pad split from talking with some of their team members, it sounds like they've had a lot more success in Denver with short-term rental operators transitioning to pad splits versus your single tenant, lazy landlords, or more traditional landlords, I should say, which makes sense because hey, short-term rental is that you're already running a business, right, a hospitality business. So they're used to
activity.
They're used to being very engaged,
Yep.
putting in upfront costs. So like, I'm interested to see what numbers look like if we can ever see those. And I think it'll probably be a lot more short-term, medium-term rental people versus like long-term single tenant landlords.
Yeah,
agreed.
I think to their credit though, didn't they say they had like 24,000 doors
nationwide
managed?
Oh, they have a bunch nationwide. Yeah,
nationwide.
I think for a lot, especially like lower cost markets. I mean, I think that it makes a lot more sense. They can probably even sell properties to investors who want that, but I just don't like.
Not a lot of presence in Denver.
You're gonna buy a $700,000 home in Nevada for room by room?
Yeah.
No.
Right.
Or I wouldn't. I wouldn't advise any clients to do it. Right. Go buy.
Wasn't that what we were looking at? Wasn't that about a 700,000?
It was nice. I don't know
maybe
if it was
600,
650.
Yeah, I mean,
it was close. Yeah.
It's not cheap.
Yeah.
Right. No, to your point. Exactly.
And and I think the big thing too is you have to spend all this money to renovate it, furnish it, and then whenever you sell it 5, 10, 20, you have to undo it all because you're not doing any improvements. You can't just refinance and say, appraiser, it's a 7 bedrooms, so I want additional
You made it dysfunctional.
Yeah, actually, if anything, the appraiser might punish you and say, well, you just took away all the space and you're just calling everything a bedroom, so you won't get, it's not a value add. All I'm doing is a cash flow play.
I think for that, because I have like for people who've done that, 'cause I've heard some stories and talked. I think when people do a cash out refi, when they upgrade, I think they do a lot more like DSCR loans, which probably have more flexibility than traditional, because DSCR is they're gonna underwrite it differently.
Sure.
And that's what they're more like debt service coverage focused. So I think that's been like their focus. Is I've seen that.
I could see that very well.
Just talking to lenders and their pad split people, they've done more like debt service coverage ratio loans.
Makes sense.
Which makes sense because you'll make more income off it.
Yeah. All right. Cool. So got some news articles we'll dip to in a minute, but then real fast, we'll talk interest rates before we get news articles, because we were just talking about, we're recording this, I think, September 16th. And 40 minutes ago, Troy, you were saying the Fed just kicked off their meeting. And the anticipated expectation that there'll be a quarter point rate cut.
Quarter cut.
And the last few weeks, mortgage rates, which are not directly tied to the Fed's rate.
Yeah, thanks for pointing that out. Thank you, Chris.
Has decreased dramatically, at least relatively speaking, last year. I think it's like the lowest it's been in a year-ish or so.
Yeah, I didn't look over the chart. I should have taken a peek at that, but we're definitely trending in the right direction. The 10-year treasury is at 4.03 as of today, this recording.
What was it at?
4.03.
Wow.
On the 10-year. It had been hovering around the 4.2. And I think when we got together last month, when I looked at this, we were kind of at the average Freddie Mac nationally was 6.7. We're at 6.35. So, but I am seeing some rates where we can buy down into a 5 and buy down the low 6s and kind of the pars sub 6.5. Nice. So that's it's trending the right way. How much more? That's the big question. What will happen after this meeting?
So what's again, this is like last 2 weeks, 3 weeks, I think rates are really starting to soften. Yeah. What are you seeing? Because I think often like lenders are kind of like the first professional in real estate that kind of starts seeing activity. Yeah. Are apps up? Are calls up? Are clients in the pipeline up? Like what are you seeing as far as like a leading indicator?
Yeah, I definitely on past clients calling about that, especially people that have financed in the last couple of years where they were in those higher rates. We're starting to see some calls come in and definitely having conversations with quite a few clients about possibility of refinancing. So definitely, to your point, Chris, this last week, 2 weeks, we're seeing more activity with that. So that's a teller. As far as buyers reacting to it, haven't quite felt that yet, but hopefully, like with this message going out, right? You can start taking notice, because I think there's some deals to be had with some better rates and the market still being a buyer's market.
Are any guys noticing like any activity or hearing people as far as just like listing activity, or any of your guys' clients or buyers picking up?
I think the diehard house hackers are still just like cruising along. They haven't missed a beat. Like yourself, Jeff.
Yeah.
You don't care what the rates are doing. Yeah. You're buying a house a year.
I almost prefer rates being higher, right? Because then it's more of a buyer's
competition.
Because look at it that way. I'm like, I'll just refi when rates drop. Like I look at it more long term. I'm like, I don't care. Of course, I would love a 3% rate, but I know what that entails. I have 10 offers.
And you're not getting that again.
Yeah, and I'm not gonna get that again. But let's just say that dropped tomorrow 3%, then it'll be all over again. Even 4%, it'll just be
or even 5.5. Honestly.
Yeah. There's like a threshold too. I'm sure whatever that number is, will just bring buyers. The floodgates will open. And this is the small ones. And to answer your question, Chris, there is some buyers that are more aware of it, but the average buyer, unfortunately, doesn't follow the Fed and all that. They just kind of like, like they'll just, the smart house hackers keep going no matter what. They don't, like, obviously they prefer a lower rate environment, but if it's 6, 7, 5, doesn't matter. The ones that are more of the wait and see ones, those are the ones that kind of make their decision based on market conditions. But when rates, also fear plays a role too. So when rates do drop, then some buyers are just not gonna make a move anyways, even though they probably know like, oh, I'll get a better deal, but they're just afraid of their job, like losing their job or the economy or whatever, right? So they almost freeze. And that's, I think, pretty standard for buyers markets too, is the people that really eat it up are investors.
Yeah.
And I think too, for our house hackers, investors, I think they're a lot less like rate sensitive and not like what we see in the headlines for all these buyer activity picking up, where I don't think they're the average consumer when they go out there looking at deals. Jenny, have you noticed anything different on your end with any clients or activity or any chatter down there in the Springs?
No, but just kind of going off what Jeff said, I think it is kind of what is David Green calls it, like the flock of birds. Yeah, so I think it's kind of that same, same you know, assessment on that. But really, I think if you're like a cash buyer right now, I don't know, now is kind of the time, I think, to pick something up and then place debt on some or all of it at a later point. So
didn't you buy a place or two in the last couple of years, Jenny, and you're on like the 7s interest rate, right?
Yeah, I paid that one off though. So
okay, so you don't have any refi temptation then?
No, I don't have any refi temptation on anything. So I'm just kind of in the let it ride phase right now. But yeah, I'm always curious to see what happens, obviously. But yeah, I don't know. We'll see.
All right. So great reminder out there. If you do have, because Troy and I were chatting about this before we started the podcast, if you bought in the last couple of years, reach out to your lender or reach out to Troy and kind of see when that sweet spot makes sense to actually conduct a refi. Mm-hmm. And if you got a 1 or 2 year kind of like, buy payback period, might make sense. But like for some people who bought in the high part, might start making sense here in the near future to look at a refi. All right. So Jenny, I know you shared a couple Colorado Springs articles. I want to start here. Then we got some Denver ones. The first one you shared here is apartment boom. Downtown Colorado Springs triples numbers of apartments since 2021. Tell us about this article.
Yeah, so this was published on KOAA yesterday, September 15th by Noah Kaplan. And basically this article is stating that since 2021, the number of units downtown available for rent has tripled. It went from 1,000 to 3,000. And the main point that this article brings up, which I agree with because I feel like I've been a broken record stating this over the last, however long, is that the rents in which these new construction apartments are being offered at does not match up with what is affordable to the residents that would want to live in these apartments. So, rents are ranging from $1,500 to $2,200. I've seen even higher than that. But that just is not congruent with the average median income for this area to make it affordable. And that's kind of what a lot of this article is stating. It has various people that like being downtown, but they're quoting that, it's out of their price range, it's out of their budget. So, at this point, they're going to live outside of downtown and just come in and visit, is kind of what the main points were on that. And that's makes sense.
Do they, I don't think, and I didn't read the full article, but they don't have any occupancy or lease up data in here, right?
No, the article was more focused on the residents' point of view on the affordability piece. Yeah. Because
I'd be curious, like I get that, like premium Class A properties aren't marketed towards the average renter, right? They're not geared towards the, average AMI. So I'm curious as to like, hey, what's the percent of people willing to pay the premium rent, right? Because there's always some people. Sure. It depends. Hey, what's that supply and demand look like? And when you said tripled, like 1,000 to 3,000, I know that is tripling. Man, I thought it'd be a lot more units though. Like from like a total number, that does not seem huge to me for like Colorado Springs, which is, a decent sized market. Mm-hmm.
Yeah, the downtown though is, quite small. If you compare downtown Colorado Springs to downtown Denver, it's like a, very small, size comparison. So it kind of makes sense just given the footprint.
All right, this next article you have here, new developments expected to add nearly 500 middle class and affordable housing units in downtown Colorado Springs.
Yeah, so this was posted on KKTV by Elmer Sagastume on August 5th. And basically the main sticking point of this article is that there is a housing development currently being created that I found to be interesting because it's actually trying to assist people that are right in that middle piece of the income, range within town. So they have one phase that's being open to people that are 30 to 60% of the, median income in the area. But then they're also going to start another segment of this development that is almost 200 units for 80% to 120% of the average income in the area. So I thought that was kind of cool that they're appealing to those people that kind of are straight in the middle, like, things aren't cushy by any means, but they are making too much to qualify for any type of, other types of assistance. So this, I think, could really help a lot of people kind of, get a footing by assisting in the housing aspect.
I'm amazed that you talk about that phase one where it's 30 to 60% AMI. Monthly rents with utilities starting around $590. Wow. Mm-hmm. Yeah. So is this, this has to be some type of they must be getting some type of government subsidy or tax break, right?
Yeah, I think it said something. It says developers with Draper Commons said they're seeking final funding approvals through Proposition 123, a state initiatives to support workforce housing projects available statewide.
Okay, so this hasn't broken ground yet. They're still in the planning phase.
Let's see. Yeah, I think so.
Yeah, well, that would be cool if they get that funding.
It's a 3-phase approach.
Yeah. Well, hopefully they can make that work.
Yeah, that would be very helpful for a lot of people, I think. So, fingers crossed.
Well, all right, couple more articles here. So a couple jumped out to me. So you guys remember the notorious Aurora complex that got taken over? Yep. Guess who got in foreclosure? Guess who got foreclosed on? Wow. So this was an article I think I got from I think it was BizDen. But U.S. Bank foreclosed on the 54-unit complex last Wednesday. So it was a couple weeks ago. No one else bid on the property at auction, and it's Whispering Pines, who's formerly owned by CBZ Management, the New York firm that claimed in August 2024 or managed it. And then they had defaulted on a $7.2 million loan. It's in receivership now. Here's what the receiver said. But only one unit paid rent in October, who wrote that one or more tenant advocacy organizations has apparently met with tenants and advised them not to pay rent, which may complicate my work. Rent collections remain challenging. Residents have informed my office that alleged gang members have demanded that rents be paid to them rather than my office, which has apparently been happening at the property prior to my appointment. Wow. Holy hot mess, huh?
Yeah, hot mess. Putting it politely.
Yeah. In early January, nearly 75% of the units were vacant, and Singer has coordinated hundreds of thousands of dollars of repairs and secured a new insurer after the previous one declined to renew after the reports. So, yeah, good that property's being moved and the market's moving and clearing. But man, what a mess, huh?
Nightmare.
Yeah. So hopefully that gets sorted out, and those poor tenants over there can get resituated. One other thing that I thought would be really interesting to talk about is showing trends on here, because that really shows how we're doing compared to other months. So here is. Well, I'm having a hard time pulling up. Give me a second. Find the right window on here. So here is the Denver showing trends. So this bright pink line is 2025. And you can see here we are, within looks like 2 or 3 tenths of 2024. So in August, we're about 5.5 showings, per unit per month. 2024 was, I don't know, 5.6, 5.7. 2023 was close to 8. And then 2022, again, this is after, interest rates started going up, we were a smidge above it. At the pre-COVID, the average between 2017 and 2019 were about 8 to 9 showings. So, we are quite a bit below it, but based on the way the market's feeling, I thought we'd be like farther below on how it's feeling.
Yeah, I agree.
And then Colorado Springs, I don't know where that window went, but that had very similar showing trends as far as just like trends on metrics. Oh, here we go. Just kind of like overall trends that we're seeing on there. So parts of 2020 and 21 were literally off the charts, above 16 here. And then this, I think this maybe teal line at the bottom here, you can see just over 4 showings. And then 2024 was like, I don't know, 4.5. 2023 was close to 6. 2022 is like 6.2. And then that same thing, pre-COVID, 17, 18, 19 average was right around 8 showings. So different numbers, but overall like very similar trends, almost to like exact same type trend lines.
Yeah, it's interesting.
Surprising to you guys?
No, not with rates where they're at and the economy. So that's balanced, balanced market, more buyer centric. So great time for buyers.
Yep.
I'm surprised it's not
I'd
worse.
love to see I'd love to see like an overlay of this and inventory amount. Like, is there the same number of activity total? Like just over more homes or,
That is a good point.
Mm-hmm.
Maybe we'll see if we can get someone to get that data for us.
Jenny.
Everyone's spare time here, right?
I just want to throw that out
Jenny's
there real quick before anybody was volunteered.
I'm not smart enough to figure out how to do it. So
Cool. Awesome. Well, I think we covered everything on the agenda. Any final trends, deals, articles that you guys want to chat before we wrap up for the week? Month?
I just think things are still happening. We talked a little bit before the podcast about appraisals. We saw a few early in the year that came in a little soft, but everything's been strong since, and we've had several over appraised. We just had one today. It came in 10K over. We'll talk about that particular deal later. Jeff, don't spill the beans.
Nope.
So you've had more coming over versus at or low, right? If I recall.
Yeah. It would be nice. Maybe I need to dig that data up. By and large, most come in at, but we've had a fair amount over. We've had more over than under for sure.
Okay, so most are coming in at?
At, yeah. I'd say, if I want to throw a rough percentage, I'd say about 70% at, maybe even 60% at, maybe 25% over, and then maybe the 5 or 6, 10% under.
Yeah.
Kind of thing. It's rare for it to come in under. But we've been seeing a fair amount over.
Yeah, no,
like Jeff's that came in 55 grand over.
Yeah.
So even when you're writing offers that, hey, you're coming in, kind of at, rather than trying to get the price the lowest, hey, you're coming in kind of maybe around where they're listed at or something lower, and you're adding 2 or 3 points of concession on there.
Correct.
Exactly.
You're still seeing them come in at or sometimes even above.
Yes.
Even with the
yes. For sure.
Maybe a slight elevated price that you would normally take since you're taking 2 or 3 points on concessions.
Yes, so we don't have to do the over asking to get the credits. We just have to do at and then ask for the credits, and then it's more than likely it appraises at that price. So you get the full credits.
Yep.
Great.
It's worked out great.
Yeah.
Consistently,
Yeah.
too. Yep.
All right. Well, Jenny, Jeff, Troy, thank you. Another great podcast.
Yep.
And, of course, viewers out there, if you guys have any questions or comments, let us know. If you want to look at getting a loan or refinancing, come talk to Troy here at Nova Home Loans. If you want to look at buying a place here in Denver, definitely put Jeff on your list. If you're down south, put Jenny on your list for Pueblo and Colorado Springs. But I appreciate everyone listening, and Jenny, Jeff, and Troy, I appreciate you guys coming out and sharing your time with us.
Thank you, Chris.
Great. Thanks, Chris.
We appreciate
Bye,
you.
guys.
Thanks, Jenny.
Bye, everyone.